here in West Africa, the Bank of Ghana is on the cards. Standing by to walk me through the Bank of Ghana's decisions and what it means for the domestic market is Fred Duvor, Managing Director and CEO at Apakan Securities Based in Accra. Good evening, Fred. It's good to see you again on the show. Well, give me the highlights of this interest rate meeting and the decisions taken so far.
Okay. Well, expectedly, the Bank of Ghana maintained the policy rate at 13.5%, following the 1% cut that it did 2 months ago. And it cited a balance of risks to growth and inflation as the reasons for holding the rate constant. The data released show that there's been strong economic growth as the Ghanaian economy continues to open up following the pandemic last year. And although inflation has also inched up in June, I expect it to remain within range for the rest of the year with a slight upward bias. Also, fiscal data that it released showed that there's been a higher than targeted fiscal deficit for the first 5 months of the year. This was largely on the account of underperformance of government revenues. But however, the fiscal authorities have also been able to cut spending to match revenue shortfalls.
Interesting how you think this interest rate hold at 13.5 reflect the state of the economy and Ghana's financial markets up to this point in the first half of the year, Fred?
Actually, it does, and the market also the market expectation is also in line with the central bank's decision to hold the rate. In hindsight, the unexpected rate cut in May at their last meeting, it has currently been justified given the behavior of inflation in the last couple of months. After declining to historical lows due to the base effect, consumer prices have now indicated an inflection point as the base effects have worn off. So we should see an upward trend in inflation in the near term, although we expect it to continue to remain within the Bank of Ghana's range for the rest of the year.
Inflation. Even the IMF spoke about it and says, look, there will be a whole lot of issues. Ghana needs to keep its eye, the Central Bank of Ghana, the Bank of Ghana needs to keep its eyes on inflation. So in terms of how the financial markets are expected to react to the latest decisions, with inflation being the big elephant in the room, or that particular benchmark in everything we talk about, how is this inflation view impacting on asset pricing and all of that?
Well, to be fair, the inflation has been relatively stable, and this is largely due to the base effect, where sometime last year, at the height of the pandemic, we saw prices gallop. So the base effect has given us a favorable inflation rate this year, but there's still some upward risks to inflation. The markets expected a whole decision because of the cut we saw 2 months ago, and we expect that the market activity will remain stable as the current circumstances have been priced in. We expect equity investors to continue to take profits from the market, and we don't expect any significant price swings in the fixed income market.
When do you think we have about 2 more interest rate meetings between now and the end of the year in September and November? So how do you think the BOG will decide in the next 2 meetings, considering where we are right now in the first month, wrapping that up for the second half of the year?
We actually expect the rate to be held at 13.5 for the rest of the year, given that following the new taxes that have been introduced, so there are certain upward risks to inflation. We expect that the new taxes the effects of the new taxes would play out more in the second half of the year. So the central bank will be mindful of this, and we expect them to continue to hold the interest rate at 13.5%. For the next 2 meetings that they're going to have before the year ends.
Okay, so when you look at the market for the second half, what trend are you seeing in terms of how investors play the parameters, the macroeconomic environment, and the key issues moving into? Why do you think investors are leaning on the equity side, on the fixed income side? Well, how do they play? What's the interplay here for investors in Ghana?
Okay, so I mean, the first half of the year has been very good for investors. The equity market has performed fantastically well. I think it's the best performing stock market in Africa, returning around 36%. And yields in the fixed income market have also remained elevated, considering that inflation has been relatively stable and the currency has also been performed fantastically well. So investors have actually been smiling in the first half of the year, and in the second half of the year, we expect there to be a lot of profit taken by investors. We've actually seen that trend start. Foreign portfolio investors have started selling off their bonds because they've made quite a bit of money in the Ghanaian market. So they're taking profits from the market. So this we expect to impact on asset prices in the market, and we will see a bit of price declines in the equity market, at least in Q3, but we expect this to turn around in the fourth quarter. In the fixed income market too, we expect that there will be a bit of a price movement due to the risk of sentiment by the foreign investors and this selling off.
I'll give you about a minute or less. I'm sure you saw Nigeria yesterday talking about banning, stopping the sale of FX to Bureau de Change. What's the situation in Ghana when it talks about the currency vis-a-vis the US dollar?
Well, the currency has had a pretty good performance against the US dollar this year. This is on the back of the central bank having quite substantial foreign forex reserve. So I think from the beginning of the year up until now, the cedi, up until half year, the cedi appreciated by 0.13% to the dollar. We all know that Ghana has a floating currency regime, unlike Nigeria. So the cedi has performed quite well. At the early part of the year, the country went to the international market to raise some euro bonds. So the dollar reserves have been shot up, and the central bank.
So you've seen a whole lot of we've seen a whole lot of inflows into the Ghana market. Congratulations.
Exactly.
Thanks for your time today. Wish you all the best over there in Accra. Fred Duvor, Managing Director and CEO at Apakan Securities.